Hello, everybody. Welcome to Wall Street Hackers, one of the popular shows on the Pod TV network where we discuss investing in the stock market. I'm Nick Pallavi. I will not be your host today because we have a person who knows about investing. And this gentleman received his bachelor's degree from UCLA in economics. He also received a law degree from the University of Miami and an MBA from NYU. Then spent 17 years in the investment world in New York City. And with that, we're going to bring another than everybody's seen him before, the hacker himself, Mr. Peter Bennett, to give us the tips on what's going on in the market today. And I'm looking forward to what am I going to do with all this money? I got to invest it in the stock market to make back all the taxes. So,
you mean it? Yeah. Nick has a specific situation we were dealing with where you might have to get some capital gains, and how do you avoid that? But that's a discussion.
We'll worry about that later. Let's make it back in the stock market.
I don't think the audience is quite as interested in that as some of the other subjects. So welcome to Wall Street Hackers. The date is November 18th, 2025. You can catch a new episode most weeks, starting on Tuesdays at 6 p.m. Eastern Standard Time, depending on your distribution channel. That said, we're going to be off Thanksgiving week, and we'll return starting Tuesday, December 2nd at 6 p.m. Eastern Standard Time. So as always, we start with the market report. Been a little bit of an ugly market, not surprising. Wall Street, we've been talking about some of these issues for the last 2 months at least. We'll see where it all goes. We're now starting with quotes of the week, which relate to the market. And of course, these quotes follow the Wall Street Hackers perspective. So one footnote I'd like to begin on a positive note, and this does not affect the Wall Street Hackers philosophy of investing, my philosophy of investing, which is basically looking for businesses that generate income with strong cash flows that are defensive. If I bought a pizza parlor or a dry cleaner or any other business and bought into it, I wouldn't be saying, "Oh, what's the value today? What's the value today? I'm going to sell. I'm going to buy." It's for our philosophy, which history shows is the best philosophy, hundreds of years. We want dividend stocks, other income generators that have proven historically to do better. So we're buying businesses, and we're looking at very long-term investing. We're not traders, although sometimes we'll make a trade or two. So that said, some quotes of the week selected from other articles. From Eric Connolly, this was at the end of the week, I think Friday. The S&P 500 ended the week flat, masking significant sector rotation and capital flows beneath the surface. Investors favored foreign markets, defensive sectors, and value stocks, while U.S. small caps growth and high beta names lagged. This rotation suggests a durable trend of moving away from the U.S. risk assets towards foreign equities, defensive plays, and commodity hedges. So even before I get into the other quotes, I was planning on doing it at the end, but I'm going to say this. That first of all, I wouldn't be moving into foreign markets. I think they're just as vulnerable in the long run. Probably the U.S. is the place to be. Defensive sectors, yes. Value stocks, who knows? But and I'll say now that, just because tech is not doing as well doesn't mean that there's suddenly great valuation in a market that's very overvalued probably anyway. But again, doesn't affect our investment philosophy. Next quote from Luca Socchi, November 15, 2025. The 3% world, the bond market tells what the Fed won't say. Parenthesis, but markets don't care. So the macro environment has shifted with inflation, interest rates, and treasury yields now structurally higher than pre-pandemic norms. The Federal Reserve appears to tolerate 3% inflation, prioritizing labor market stability over aggressively pursuing its 2% mandate. A sustained 3% inflation world means higher treasury yields and a new standard for risk-free returns, impacting portfolio construction and investment philosophies. One last one from Hawk Invest, also November 17th. The stock market faces heightened risk as Bitcoin, meme stocks, and AI stocks experience sharp declines, signaling a potential end to the bull market. I'm not convinced of that for the long run, medium run, but recent plunges in Bitcoin and meme stocks show increased market vulnerability. Valuations for S&P, the S&P 500, that is, remain historically high, with momentum shifting down and margin debt at record levels. A rolling correction across assets could escalate. So, a couple comments on both these articles. One, yes, we're in a higher inflation world, probably permanently, and I'll mention that in a minute. But the rotation in AI stocks was probably inevitable. It can't go forever. The stock market's been driven by AI for years. It looked really great for a long time. I was suggesting some of it, KLAC at times, and others, but mostly I've been out of tech because it's not our general philosophy, whereas there's a longer term philosophy. But tech was very good for years, but at some point it reaches a max. And in the last 2 months or so, we particularly were saying AI looks like it's hit the max in terms of value, because when we saw the study that said 95% of companies that were investing billions into AI were saying no return at all, zero return. How long are they going to invest if they're getting no return? And the other thing is, again, my personal experience, I mentioned this last week. It's like I call a broker, I call a health company, whatever, I get AI. It's like, get this thing off my phone, because it barely understands English. And when it does understand English, it really generally doesn't help me. Once in a while, I'm surprised when it actually does help. And then I worry about, replacing jobs, but it's a far away from that, depending on what kind of job. Excuse me. So the bigger issue really for the economy isn't just AI, because that's just a rotation of the funds and the high valuations. But the problem is that comment about the 3% inflation yield world, a 3% inflation world, because the point was that 3% would affect portfolio construction. The problem is, what if we get into a 3.5% or a 4% inflation world? And the driver of that would be the massive money printing that might have to occur, probably will have to occur in the United States and around the world because of the debt. So every other media outlet pretty much in the world says, oh no, the U.S. has 38 trillion in debt. And there's not much mention of the other debt in the other countries, at least on U.S. media. The problem is the U.S. debt is probably realistically about $125 trillion because of the massive, massive underfunding of Social Security and Medicare. Thanks, Mark. Appreciate that little tag there. So he's our tech guy who puts up those things. So it's $125 trillion is, counting these future obligations, is more money than the U.S. stock market, the U.S. bond market, all privately held in commercial real estate in the United States. And other countries are in very similar situations. I've looked around the world, in Europe and South America. The debt it's been piling up for 50 years, and politicians keep kicking it down the road in the United States, and it's ignored in many other countries. So as Milton Friedman said, almost everybody knows who he was, he supposedly famously said, quote, inflation is always and everywhere a monetary phenomena. So hopefully we're only in a 3% world, but whether it's 3% or maybe 3.5% or 4%, and again, there could be some underreporting of that those numbers because of the way they're designed. What if the economy doesn't grow, and President Trump is doing his best to grow the economy? Footnote: it's $18 trillion he's brought in of money from foreign investors, which is an amazing amount just in the last 10 months since he's been in office. And the Biden administration, during their 4 years, brought in $1 trillion. So the $18 trillion helps a lot, but 125 trillion, they're probably going to be massive money printing. And even in the United States, if they don't massively money print, the rest of the world will, but that would, of course, would help the US dollar. But a lot of these companies are also international, and that would affect them too. So to close on back to a positive note, it's a very complex, let's say, macro environment, but there's still opportunities. They're just really hard to find, but we have at least a few that we're going with. Okay. Most interesting story of the week. We've been skipping this section, but we're back to that now. Governor Gavin Newsom's critics took a victory lap this week when California revoked 17,000 commercial licenses it had issued to migrant workers whose legal okay in the United States was going to end before their licenses expired. Now, okay, bad enough you're giving licenses to illegal alien migrants, but the problem is these 17,000 who are driving massive trucks on the U.S., all over the U.S., many of them could not speak English. They didn't pass their English proficiency exam, and at least some of them couldn't understand the road signs. They're kind of like they're big trucks. So this is the California pulling this is clearly an admission of its dangerous policies, but also it could be because Newsom wants to be president. We know, everybody knows that, and it won't be a good question like, how are you letting illegal aliens drive massive 18-wheelers on the road? So, another thing, just to conclude that, no problem. Let's let 18-wheelers on the road by people who really can't read road signs, and let's let Pacific Palisades burn down for pretty much no reason, and let's not let them rebuild it. It's like, oh my gosh, it's amazing that this guy wants to be president. If he runs, he's going to have a lot of problems, but he probably won't be the nominee. Why President Trump or someone in the White House should give me a call? Although President Trump and Congress have been almost generally doing really well in terms of policy, because they don't worry about Epstein and all these issues that were really just distractions. Although, as a footnote, they're going to release these Epstein files today. And I wouldn't be surprised if this backfires too on those who want to open it, because the MSNBC and the psycho media has been saying, oh, it's, we're going to catch Trump. They're trying to do like a Russiagate on him. Like they were saying for years, he's a Russian spy. Yeah, right. But they're not going to get away with that. And in turn, I wouldn't be surprised if a bunch of Democrats turn out to be the ones in the Epstein file, because Trump might have been actually the one who turned Epstein in, as a footnote. But anyway, my point is, they should call me because I know how to unwind Obamacare, or at least I can take a lot of cracks at it. And I can certainly make it better. And they've been saying they want to improve it for 4 years for the first administration. And also, I can make major improvements in Medicare. I know I have a lot of expertise in that area. And also, perfect ideas. The president, and I'll criticize him when he's wrong. It may be 5%, maybe a little more if you want to argue some political things he does. But I mean, he's definitely on track on so many things. But he's been saying, well, we want to cut out the middleman and give the money straight to the consumer. That is really sorry, President Trump, if you're listening, which I know you are. But that is crazy because, one, insurance companies make, according to a 24 study, 1.9%. For every dollar. They collect $1,000, they collect $19 to administrate the whole system. It's not the insurance companies. On the other hand, if you want to look at something, why don't you start looking at Advantage companies? Because Medicare Advantage is a joke. Doctors all over the country are dropping out. At least 15 hospital networks dropped out this year. They're rejecting claims in order to make money. And the only reason that they can sell them is they give zero premiums and give huge liabilities to people in general. So, yeah, there's a lot to be looked at. Give me a call. Okay, moving back from that subject, investment of the week. First, disclaimers, Wall Street Hackers is for entertainment only. These are only our opinions. There are no guarantees on any of our suggestions, of course, because nobody guarantees anything unless a fixed income instrument is held to maturity. Consult your financial advisor. So last week I talked about gold, and I'm going to talk about gold again because I discovered something really interesting. Nick, you might be interested in that because last week you said you might be moving towards gold a little bit. So last week I'm going to go back over last week's discussion for those who missed it. I said we moved to 5% gold as a hedge, but I also said gold is not a great inflation hedge. It can work against inflation. In the 70s it worked great, but the thing is, at other times, it doesn't work well. You can stay in there, Nick, if you want. We're going to still have the investment discussion next, the panel discussion next. But so here's the thing. So we moved from like 2% to 5% gold, and it's been doing phenomenally well as a hedge, as a diversifier. And also, my attitude is, since we are an income-generating portfolio, allocation oriented, that was not a sentence. Basically, my thought is if I'm earning a high yield on my portfolio, especially again due to MPLX, which is still at 8%, then to me it's the only absolutely undervalued safe dividend grower with a high yield in the market. It is phenomenally. It's gone up in the last week from 50 to 53 because it just gave its fourth double dividend increase, 12% increase, bring it back to 8.5, but now it's about 8. But so because we get a high yield, let's say I put in 5% in gold as an example, and it goes in half over the next 10 or 20 years. Then I lost 2.5%. But if I'm earning, let's say 5% of my portfolio or more, then I make it up anyway. I can eat that loss and it's a diversifier and a hedge. But here comes the interesting thing. So last week, during the week, I suddenly thought, I wonder if it correlates with monetary policy. It doesn't correlate with inflation. And here's the chart I found. If I can get this up and you can see it. By the way, I made the dots because I knew it wouldn't show up that well. But this is from 1960. And it's reversed, by the way, at least from what I see on the screen. But this is a chart from 1960 to near the present of gold versus monetary policy. And those little dots track the gold price. And you can see two things, at least. Monetary policy, they're creating a lot of money, especially in the last few years. But also, gold tracks monetary creation, money supply, that is, I should say. Let me rephrase. Money supply versus gold is the chart. So the money supply and gold are almost correlated perfectly. I will footnote, gold got a little ahead, but we're talking about an 8,000% increase in gold and a $7,400 increase in monetary supply. So as they create money, gold correlates really well. So I upped it to maybe 5.5%, less than 6. I don't want to have too much of gold. I'm not 100% confident in it, but as a diversifier, as on the other side, the upside, by the way, to leave that on, it may go down and maybe I'll lose 2.5% of my portfolio in the next 10 or 20 years. It could also go 10 times like it did in the 60s. Some would argue then just go with gold miners, but they're erratic, but you could do even better with those. But I'm not a gold miner oriented because they really can be very variable in terms of performance, and they have their own expenses. So I just stick with my relatively small allocation to gold. But one of the only few large allocations in the portfolio, other than some bonds, especially in my IRA, treasuries, and MPLX. So we'll bring in Nick. Panel discussion. Interesting point, Nick, right? About the gold, by the way.
Yeah, and I do have some gold, and it just keeps going up in value. But
oh yeah, but this monetary, the thing is, if they're going to have to print all around the world and in the United States all this money because they can't deal with all this debt, then if it correlates and they double, triple, quadruple the money supply or more because they just can't keep up with the healthcare costs, which it seems to be happening now, then all this money printing is going to flow into gold, maybe with a 1-to-1 correlation. So 5%, I like that number. Again, I don't want to take a risk like with more, but somebody might say, I'll put in 50%. Who knows? I'm not a risk taker, really. I like things that a balanced type of approach. So panel question of the week. And we're at 1950 in terms of time, so we have some time. The question, should the Senate kill the filibuster? And that is not a simple question as you would think. So I could see it from your face. It's not simple because you're thinking, should they, shouldn't they? So I'll give you the background and the audience, and then we'll discuss it. So the Senate filibuster is a critical part of the balance in our government structure. It allows the minority party, whichever is in power, to prevent the majority party from making really extreme decisions that don't make sense or just extreme decisions. And B, more importantly, the majority party, it prevents them from making political decisions to ensure that they will remain in power for the rest of time. This basically leads to dictatorship. So it's a really important balance, and it's been supported obviously by senators over the years, and it's really important, bottom line. On the other side, President Trump recently argued that the Senate should now eliminate the filibuster. And his arguments were, one, that the Democrats were going to eliminate it anyway. They tried it during the Biden administration, and they were really close to actually doing it, which was ridiculous at the time, because there was no threat that the Republicans were going to do it when they got in power, but they were 2 votes away. And the 2 votes were Sinema and Manchin, who are now gone because they're moderates, and the Democrat Party keeps moving leftward, and moderates don't fit in there anymore. So now, the argument is, if the Democrats get power, they'll probably do it on the second day or the first day. And what they're going to do as soon as they get power is, and this is what President Trump said, he said they're going to make Puerto Rico and Washington blue states, which wouldn't surprise me at all. And also, they're going to pack the Supreme Court, which they've talked about for years too. So that's what his arguments is. And basically, I guess that leads to the question, Nick. What do we do about this situation? It's like a Lady or the Tiger kind of situation.
Yeah, you can see arguments going both ways, but the last one I heard, which seemed to make sense, is if you eliminate the filibuster, then you run into a situation where you can that a simple majority would win all the time, which means that you could be bouncing up and down when it comes to the laws and the regulations. In other words, you lose a lot of stability.
Absolutely.
One thing that the filibuster does is it forces people to be more stable than unstable. Otherwise, you're going to have a situation every time the majority gets in, it flips everything around.
Absolutely, you're absolutely correct.
I'm really not when it's not broke, don't fix it. We've got a lot of things that need to be fixed, Peter, and that one isn't broke. So don't fix something that isn't broke when you've already brought up things that are broke that need to be fixed.
Well, I'm glad you took that position, Nick, because 3 weeks ago when I first heard this, that was the position I took. However, I'm going to argue the other side, and a lot of times we agree on things, but it's always interesting when you have a little bit of debate. So I think President Trump is right that the Democrats will do away with it in the first day, so its days are numbered either way. But it's short term versus long term. So my concern is if the Democrats do get in power, they're going to eliminate it 99% because they don't care about rules. They just care about power. A lot of them. I mean, some of them may have moral reasons why they believe in what they believe, but I'm saying they break rules all the time, whether it's the border laws or, trying to impeach President Trump for asking why Biden family got $5 million, just asking the question. They impeached him. They tried to make him look like a Russian spy during his first term for years. So they're willing to do anything for power. Now, if you believe in a lot of things they believe in, maybe that's because they believe they're right. But the problem is I firmly believe the filibuster's days are numbered. So the question is, if they're really numbered, then do you do it now and the other side point you made about the country broken? we are in big trouble in terms of the debt, in terms of the hole that's been dug, with inflation during the Biden administration and the debt, which has piled up for 50 years and so many other issues. And if the filibuster were eliminated, at least for the short run, President Trump could get a lot more of his agenda through, much of which is probably very positive for the American people. His latest proposal is give $2,000 back in tariffs. He may not be able to get that through with the tariff money per family, which is a perfect thing because then you can negotiate and you still give money back to families. But if we lose the Senate, if the government loses the Senate to the Democrats, it won't be long. The filibuster will be gone like that. And then President Trump will be impeached again and everything. So it almost forces you to look at the short run and say, if it's going to happen anyway, almost certainly just try to handle the medium to short run and ensure at least, success in the next 10 years and 20 years by trying to help the Americans now. But it is a really later your tiger thing because it's now or later. Oh, one footnote. And I don't know if this would work or not, but I'll just throw in my last conclusion and we'll keep talking. I was hoping, and I have no idea, maybe we could ask David Walker, former controller of the United States, could a constitutional convention, and I'm thinking it could theoretically, enshrine the filibuster into the Senate laws forever? Because that would be a huge plus. So maybe you do away with it now, and then you do a constitutional convention. All of this is complex, and Washington is not simple. And I think that could be done because the Constitution rules. What do you think about everything I said? Whatever.
Well, see, I think what the people need to focus in on is the Problem Solvers Caucus, which is the Democrats and Republicans are getting together. We're looking to solve problems as opposed to create problems. Creating problems is like packing the court. The Democrats could have done it, but they didn't. Well, the minute you start doing things like that, you're creating more problems than you're solving. And unfortunately, you have problems that need to be solved. You have to solve Social Security. You have to solve healthcare, and you have to solve Medicare and housing. I mean, so you have some real problems you have to deal with, and they should have nothing to do with politics. They're math problems that need to be worked out. But as long as you are looking for the power and not the solution, you're going to lose the game. I mean, it's just the way it is. What they did in Europe, Peter, they brought up the Social Security age in some countries. They figured there's just no way out. You can't retire at age 65 anymore. So there
were also riots in Europe over some of that too. And I think they pulled back on some of that because of the riots, I believe. But you made a really good point, and it reminds me of something. So talk about politics and everything. So David Walker has said that the House has sent over to the Senate a bill to create a fiscal stability commission, which is a obviously a great idea. I mean, Simpson Bowles was there, and it gives some shelter to people, say, okay, on both sides. It's like, we have to do something. We're going to follow the commission's advice, although they don't always follow the commission's advice anyway, unfortunately. But you ready for this? So the House sent it over to the Senate, and Chuck Schumer blocked the vote to create a stability commission. So again, all politics for the Democrats, I think they have some legitimate issues. I won't get into them, but there's some things that I agree with them on, but not the extremists where they want open borders and, pro-criminal approaches and, and socialism. I mean, that's just off the charts, and they seem to be going further and further this way. But the thing is, they have some legitimate issues, but instead they just have no rules about politics, and don't see how could you not have a fiscal stability commission? I mean, it's like that would at least look at the issue, but looking at debt isn't favorable for the Democrats because they like to spend money. So it's like, if we have a fiscal stability commission, we'll have to cut government spending, but we want to spend more because that gives us more power. I hate to indict it, and I know it's not all Democrat politicians, but unfortunately they keep moving leftward and leftward. But I'm sure that a lot of them or some of them believe in, and especially like that caucus. Those are the people who are moderate. But the problem I worry about is, are they going to get pushed out now? A lot of those 10 people who voted to reopen the government may be losing their primaries. They may get primaried out, just like even Chuck Schumer, who is so liberal, probably going to get primaried out. His career is probably over because somebody like AOC is going to come in, and it's just insanity. I mean, this country's got so many problems. We don't need to deal with socialism and people who don't understand the first thing. And as a footnote, I'll add, not understanding the first thing. So now we have a mayor in New York who, forget about the fact that he's a communist. He's never had a job in his life except for failed rapper and a little bit of politics. And now in Seattle, they just voted in
another one.
Yeah, exactly. A woman who never had a job in his life. What do these two have in common? They've been supported. She's like 40 years old, never had a job in her life. In the private sector or any job, maybe. I don't know how long she's been in politics, but if you call that a job, but supported by her family her whole life, just like Mamdani. And it's like, yeah, I'm a socialist. Everybody should have a parent who, takes care of me till 40. With no experience at all. It's like that when I said not knowing anything, it's like, that's what I'm talking about. It's like, how can you elect somebody like that? But except for the media driving their crazy agenda and people not really knowing what's happening. What do you think, Nick?
Yeah, I did notice that because I used to live in right north of Seattle on Shoreline.
Yeah.
And what they're doing is they're hitting an issue hard to the young people, which is housing costs. I said, and the Republicans, this should be a wake-up call for them. You're going to lose the midterm unless you start addressing
That's what I worry about.
Yeah, so
and you're right.
It's yet to be played out, but the thing is, young people are going, hey, look, I can't afford basic housing. This is not good.
Yeah, well, this was government created too, just like $250,000 student loans, because the government said, we'll let you do the schools offer get financed by $250,000 loans. The government did a lot of massaging of the housing market, bringing interest rates down, creating, organizations that then stimulated housing prices, and they need to work on supply. There's definitely issues, but we're out of time for this week. So we will be back December 2nd, starting at Tuesday. It'll be interesting to see what comes out on the Epstein file. By the way, not what I think those who want to indict Trump is. There's no way he's in trouble, or else the Biden administration would have released it years ago. They did everything they could, including trying to throw him in jail for a campaign document that was misfiled. Anyway, thanks for watching Wall Street Hackers. As Kim always says, get healthy, get wealthy. We'll see you next Tuesday or that week, December 2nd. Have a happy Thanksgiving. Bye for now.